Ladies and gentlemen, welcome back to the channel. If it does not say live in the bottom right hand corner of your screen, unfortunately you are watching the recap from last night's live stream. If you are indeed watching the recap, go ahead, click on the main channel and find yourself to the live stream that is currently live, because we got a lot to talk about. Futures are bouncing ahead of the Fed report. You get the FOMC report coming tomorrow, a couple other Fed speakers, as well as some key data. So that's going to be very important, and I do want to talk about that quite extensively here in this video, but we got a lot of other things to talk about as well. Look at what the hell happened. Oh my gosh. Those are some wicked candles. Wicked candles. What's going on? Me too. Ugans, Cheese Chaser, Dan the Man, Jennifer Hendricks, Believe, Excel, Achieve. I love that. Matt, yo. Hot damn, what a day for a month. Yeah, it's been tough. How's Michigan treating you? You running for mayor of town over there? No, probably should. Somebody needs to. Michigan's got a bunch of money right now, but they really aren't doing too much. Not doing too much, but it's all right. A lot of Michigan is like wild though. It'll be like 85, 90, and then the next day it's like 60. So it does mess up the sinuses a little bit, but yes, we're all good. Hello, Ty. The big story of today is who cares about the stock market? I'm more worried about us arming Taiwan. So we are going to fight Russia and China. Well, that is inevitable. We're going to fight China eventually. And that's a bad situation, but I don't think it's right now. I don't think it's in China's interest, and I don't think it's in our interest to fight Russia. I mean, they don't stand a chance unless they just blow up the world. So I don't know. I'm not too concerned about that as of right now. You guys seen all the North Korea damn ballistic missiles that were launched off? Like everything from the terminal, all these updates that I've gotten over the past couple of hours have pretty much all been North Korea ICBM launches, and it's kind of weird how they came out, because it doesn't say where they landed, but it said one of them landed close to Japan, so that'd be interesting. Michael Burry says, as I said about 2008, it's like watching a plane crash. It hurts. It is not fun, and I'm not smiling. Good to know, Michael Burry. That is good to know. We are not smiling. I don't think any of us are smiling. Yeah, Pyongyang area. Need the crash. Bro, I think we have further down to go. What's up, bro? Jose Morales. How are we doing? Christopher Bate. Creamy goodness. Yeah, probably. I mean, in the grand scope of things, you're probably right. And oh man, we're in a really bad situation. We have the Fed report coming out tomorrow, which the markets, they're really going to pay attention to any new details. If there's something new about China, something new about policy, just anything new, that's what is going to take the markets either by surprise or be very good for the markets, right? So that's what the markets are going to care about. But at the same time, you are seeing a bid to the bond market, believe it or not. So bonds yields have been coming down, meaning more people are actually buying bonds right now because of what Fed Bostic said just about 2 days ago, essentially saying that, hey, we need to do 50 basis point rate hikes, but we should probably slow down or stop in September. Somebody's obviously thinking correctly. You know, you need to get rates up, but hopefully not tear down the economy into a long-lasting recession at the same time. But yeah, bond yields have been going down, so there is people rushing into bonds, which that should be become a better thing than not for equity markets. But we'll see. Snapchat really killed the day today. It really killed the mood. There's a lot of people that are very concerned about growth in general, you know, how companies are doing. And we just got earnings like not long ago too. So that's the real messed up part. It's like if Snapchat is already coming out and changing their guidance substantially lower, then like what's going to happen to Apple, what's going to happen to Microsoft, what's going to happen to Google and Amazon. That's a big problem. But energy prices, that's the biggest concern, and that's really what you want to watch the most right now is energy. And yeah, it looks like it's up another 1% for the futures, which is just ridiculous. But futures are up. Nasdaq up 0.65%, S&P up 0.46%, the Dow Jones futures up 0.31%. We're not going to go too much further down. If Amy goes below 10, they get another haircut. Yeah, I don't think these prices are sustainable. On a price to sales ratio, if AMC can get back to its pre-COVID numbers, which I'm sure it can for 2022, which would be about $5.5 billion of sales of revenue. The market cap's around $5.5 billion. So even on a way of valuing the company, price of sales, it's not perfect, but when a company is not really profitable, that's how you value them. And a price to sales ratio at a 1, not bad at all. Get comfortable being uncomfortable. Man, I love this. It sounds fucked up, and I hope people, find their peace with it. But this is where all the money is made, during times like this. That's what you want. But it can get a little bit uncomfortable, especially if you do have margins, stuff like that, which I think a lot of people have been, gotten margin calls already. So that's a very uncomfortable thing. It says, I'm not worried about the company I invest in. They're sound fundamental companies. I know in the years to come I'll be printing money. Yeah, that's literally it. I mean, there was a lot of stocks that I bought during the crash of 2020 where people just hate, people just like when a stock is doing good, you hear nobody saying anything bad about it. But when stocks do bad, everybody hates them. Like nobody was hating on Snapchat at $70, right? People were like, oh, this is the next Facebook. But when the stock's at 13, people are saying this thing's going to the OTC market. That's how you make money. You play off of people's emotions. When people get that fearful and it's a sound business, you want to buy stock. And that's exactly what I did in Snapchat today. Bought, I believe, 45 shares. But I'm already getting destroyed on Snapchat, so it's just an average down. It's all been planned since they attacked us with COVID. Something's been planned, bro. What is happening? Dude, 2022, like ever since 2020, things have not been right. At all. Things have been weird in the world. That's for sure. You got monkeypox. You got 5 different strands of COVID. You got the damn stock market falling the worst since 1939. Like, come on, dude. Give me a break. But I love it. Don't let me fool you. This is a great golden opportunity. Like, you couldn't ask for anything better. I'm sure if Amy rips, it'll come back down to about 30 to 35 at the fair value for the stock. Yeah, after any kind of like squeeze event, it would likely come down to, it closer to its fair value. But the fair value for companies is moving around a lot right now. So especially when you get like Snapchat, disappointing. Like investors, they have a set like valuation in their mind. They're like, hey, because of XYZ, because of, let's say, a 30% growth rate, this stock, we expect it to make, $20 billion of bottom line profits, 30% growth rate, we're going to give it a 25 PE, boom, times 30 billion by 25. That's your market cap. That's what the stock trades at. Well, now if you're only expecting, let's say, 20% growth at that same company, then you're going to have less revenue, and then potentially you're buying the stock for a lot higher of a PE ratio than you even thought. So the valuations are changing around a lot, especially when there's very unstable expectations. And that's really what caused the move down that we are seeing today. Just across the board, it's really the unstable expectations. Don't forget the formula shortage. Yeah, jeez, that's a tough one. How many of you think AMC will hit 10K? I mean, it's not impossible, especially, I mean, in this kind of market environment where if the stock goes up in a big way, then they're really not going to have a choice but to cover on their shorts. You know, liquidity is so stretched right now. It's the most stretched we have seen in a very long time. We have not seen liquidity this bad in probably since 2008. Cargill. Win, hit the like button. Oh man, you got me there. You got me there. Please say hello to Ling Ling and give her a hug for me. Yeah, Ling Ling. Ling Ling. She's so cute. She's getting big. She's getting so big. Win, bye Biden. Dude, something's got to give. At this rate, it's over. We have no idea how many fake shares are out there. That too. There's probably a lot. I mean, given the option activity, given what has happened over the last year, it would not surprise me to see a lot of shares out there. Because when it comes down to it, all they have to do, like, have you ever seen a physical share before? No, none of us have seen a physical share. They don't come on paper anymore. So in theory, even if you did give out a bunch of shares, all you would have to do if you were a brokerage is pay somebody when they sell. That's it. Sup, billionaire. Billionaire. Billions with a B. November 22nd, when they take back the state and the Senate, say goodbye to Biden and the Camellia and Pelosi. Man, I don't know. Just help families out. Get the damn oil price down. That is the single biggest thing, I think, besides like nuclear war or like a war with China. I think that's like the second biggest thing that would be bullish for the markets, or bullish for the overall economy, I should say. If you could just get energy prices down, because that will allow people to spend a lot more money going to do things, buying new things, so on and so forth. Hey man, I've been in and out your stream and you're all right, man. Well, so are you, brother. I appreciate it. That's ridiculous. You better have some Go Jones if you're going to hold the 10K. Yeah, for sure. The market makers own the government. That will never change. They would rather have the world collapse while they live in mansions and fly private jets. Well, pretty much. I mean, market makers are a very important, I guess, depending on who you are and, what your reasoning is. I think the market could do without market makers, but in the grand scope of things, a lot of people do think they are important. I think it's quite scandalous, to be honest, but I get the idea of market makers. Like, market makers, the idea of it is to provide liquidity evenly to both sides when you need to make sure markets don't have violent swings. Like, it's not going to prevent a market crash, but it should prevent wild just spreads in stocks, and it does that. But there's so many nuances to it. Market makers substantially drive down the market in bad times, and they substantially boost the market up in good times. Yo, Mr. Simon in the building. Let's go. Some lady stopped me at the gas station, asked for a couple gallons. Her car didn't work supposedly, and her car was almost out of gas. Okay, it's time to get rid of Biden already. Oh man, yeah. If somebody asked me that, I would have to give them the gas. I would have to. The shares they borrow every day is just crazy, and the volume has never matched the math. Nah, it never does. Left some shares in Robinhood. I don't use margin, but I still do have to turn off instant settlement, in your opinion, Tyler? Um, Honestly, I don't think things like that matter. I think they kind of are gonna do what they want to do regardless. Like if they want to lend out your stock, they're gonna do it either way. Like I don't think we have a huge say in the grand scope of things, and I don't think we would actually like make a difference in those terms. I think the single biggest thing that matters beyond anything else is, where the liquidity looks like how much money do hedge funds have? If they got $1 billion margin call, is it harder or easier for them to actually cover and deposit $1 billion into their portfolio, or put $1 billion of shares as collateral for that margin call? Is it easier now than it was in January or in June of 2021? And the obvious answer is it's a lot harder now. So I think either way it goes, some of those things are so small and minuscule that they're not going to make a big difference in the grand scope of things. I wouldn't stress out about it too much. If you really do think it will make a difference, then what you can do, essentially, you can put a 90-day order in to sell your shares at like $100 or whatever. You don't want to go super far out the money because then they'll just lend out your stock anyways. But if you go closer to the money, say even like $50, then in theory the brokerages wouldn't lend out your stock either way as often, because hey, you could force them to sell your stock substantially higher if the stock did rally. But that's something you could do. That's what I've done, and that's what I do. But it's not like I think the situation is already primed to see what we're going to see, in the grand scope of things. Has a big part in this with Mr. Ken Griffin. Yeah, BlackRock. You guys know about the Terra Luna? Oh my gosh, that theory about BlackRock and Citadel is actually quite interesting. Let's go, see money. Appreciate you, brother. North Dakota has over 10K pre-fracked and drilled oil wells from 2008 during the oil boom. All you need to do to put pumps on them. Bitcoin Biden won't sign off. Roughnecks pissed. Yeah, and a lot of oil companies, like, it's not their fault, right? Like, oil companies are not to blame here because, the administration, really, like, the last couple administrations, I like Trump was for energy, and that kept the price down for the average consumer. That is good for me or you or somebody that drives. That's a very good thing. But it doesn't encourage new drilling. But then even when they started to, with subsidies, stuff like that during Trump, and the reason why oil was down so much and stayed down, relatively speaking, and now it's not, is because these companies, they're not going to go out and spend millions of dollars and wait 9 months to open up some of these rigs when the price of oil could be much different 9 months from now. You could have a totally different market environment. Trump was for money, not energy, bro. Yeah, no, I feel you. No, I just thought Trump was an accurate representation of the American citizen when it came down to it. Like, not afraid to speak his mind. Biden does too, though. I got to give Biden some credit. Some things he said was absolutely American as hell. He said, what'd he say? He said that he wouldn't apologize for saying that Putin needed to be thrown out of power or something like that. I'm like, that's the most American thing I ever heard in my life. He said, I'm not going to apologize. Yes. Just don't make us look like a bitch, because we're definitely not. Got in here late, brother. Just my 2 cents. I see a short-term bounce starting tomorrow. Could last into Friday. Treasuries are dropping and bonds being bought. We will see a little rally. Yeah, that's what I was talking about in the beginning of the live stream. You have seen, the bonds, like you said, bond yields coming down, which should be good for equities overall. But you got hit with the Snapchat stuff. So there's just a lot of uncertainties about growth and where that's going to be. I think the Fed at this point, though, they have to realize that they can raise rates all they want to. All it's going to do is hurt the economy. It's not going to crush inflation just by raising rates. The biggest things that are hurting American families and probably families around the world is food and energy, and that's something the Fed cannot control. So essentially, if you just beat down the American family into the ground while food and energy remains high and continues to go higher, you're just setting yourself up for a shitstorm you can't get out of. That's the bottom line on that one. So I do think ultimately the Fed will realize that, and they will slow down raising rates and go to a more normal accommodation. Like, we just seen the largest month-over-month drop in the M2 money supply in 60 years. Like, money is leaving the system. Who knows where the hell it's going? Probably silver or gold or something, but it is leaving the system, and that's a big problem. Tyler, could you please give a quick refresher on the perfect storm that could cause AMC/GME to run to the stars? I would love to. My overall consensus over the last 6 months, really looking forward out, is what we're seeing right now, as bonds have seen their worst sell-off in a very long time. Down, I believe, even after this. Hold on, let's see. I believe the bonds are still down. Yeah, bonds are down 17.63% year to date. S&P still down like 16, 17, 18% year to date. NASDAQ down 30%. There's a lot of money that is drying up in a huge way. Like, there's a lot less money in people's or hedge funds' hands that can actually service these margin calls. So when you get into that kind of scenario, it's great when short positions are working for you, but when your overall portfolio is substantially down, like even these large hedge funds like Tiger Global, right, Melvin, just to name a few, they're getting beaten into the ground. What about the small guys? They're really taking a big beating here. So it makes it harder to service the margin calls. And then with the executive order that is going into effect June 2nd through June 3rd, it'll probably be June 3rd, considering that's the day after it got retracted last June. Either way, it's saying hedge funds can no longer use Chinese securities as collateral, and that was, I think, the main driving force that actually behind the scenes caused what we've seen in January and in June. So when you add that into the mix with lower liquidity, with the overall state of the markets, then I think you really just need to see some degree of catalyst. Some people would argue that the executive order is its own catalyst. And I would kind of agree with that. But I think if you do get a catalyst either way around, the next couple of weeks, that'll be good. But the executive order could be enough to get the job done right there. It happened so coordinated and perfectly in January and in June, down to the dates of the executive order actually being implemented. It's so hard to ignore. Like, you can't ignore it. That's not a coincidence. That happened twice in a row. So I do think to a certain degree it'll happen again. We're in a different marketplace. There is lower liquidity, but there is a lot more fear. So we'll see. We'll see. That's basically, what I would say is what is the underlying reason or conditionings that will make the stocks rally hard. But just a catalyst, honestly. Say about Trump lose my when Trump was in office, gas was $2. I feel you. I got gas during 2020 for less than $1 a gallon in Michigan. Joe, fact, small bounce incoming. Yeah, that's kind of what I think. If the Fed minutes as well are not like super bad, or if there's not something that is new information that spooks the markets, then I think you'll probably have a bullish reaction. A lot of the times, no news can be good news, especially when it is something along the lines of the Fed, right? You start to get the markets pricing in different things that can happen after the Fed. And if nothing ends up happening, usually that's going to be a bullish thing. But it would not surprise me to see, maybe at the next meeting, the verbiage kind of start to soften and the Feds start to speak about the economy not looking so hot because, the Fed really doesn't have it in their interest to kill the economy because of the kind of inflation we have. Sure, you kill the economy, fine. You're going to get underwear prices down. You're going to get bullshit prices down, right? What are the biggest drivers of inflation? Food and energy, which they cannot control. So to just all around beat the consumer down, to beat the economy down and not beat the problem down, doesn't make a whole lot of sense. Does that mean they will stop doing what they're doing? Probably not, but that will mean there will be some level or degree of slowdown or pivot, in my opinion, in the next 3 to 6 months. They probably wouldn't stop. If they stop raising rates altogether, that might be seen as a bad thing for the markets, because what is the Fed seeing that we are not seeing, that they need to completely stop raising rates altogether? But, potentially slowing down would make some degree of sense. Yeah, look at what Fed Bostic said today. Yeah, exactly. I said this yesterday, though, for all, fairness sakes, like this is kind of what I could see happening into the future. I don't know when it'll happen. I don't know if it'll be the FOMC minutes they talk about this tomorrow, or if it'll be the next Fed meeting or the meeting after that. But it will kind of be brought up. And then the question is, how's the market's going to take that? Are the markets going to say, hey, the Fed's right. Maybe they can't do too much to inflation. Maybe it's good for them to slow down and inflation will come down by itself. Hopefully the war in Ukraine ends or something along those lines. That's going to be very bullish. That would be huge. Oil would drop 10% likely the next day after that, but doesn't seem very likely that'll actually happen. So that's kind of what I'm expecting in the next 3 to 6 months. And like Bostic said today, essentially around like September, they want to see they don't want to be raising as aggressively because I was talking about this like 2-3 months ago, that the Fed had to raise rates super aggressively and even faster than they forecasted, because when the economy does go into a very deep recession based off of oil, food prices, all of that, which are very sticky. I mean, when you're talking about a war that, we're doing so much that directly affects the price of oil, that's going to be pretty sticky, as well as food prices, because when you basically take away 30% of the world's wheat, like that's pretty much in most food products, then you're obviously going to have the price going up. But at the same time, if there's a war going on in that country, you're not harvesting as much, you're not planting as much. The U.S. is not planting as much. We're not compensating for the wheat and the crops that we are losing out of Ukraine and Russia. We are planting less crops now than we were over the past 2 years. So when you add that together, and then you just think about the overall situation when it comes to planting, it takes a while for the vegetables or grain, whatever it is, to grow. So it can take a while for things to actually get better in food markets. Same thing for energy when you're talking about a conflict like this. A dollar cost average down in that Fubo. Yeah, I have a lot of conviction in Fubo for the long term, but it's hard to say in the near term. Like you would think like $2 would be like as low as it could go. That would be like a floor, like a bottom. But could it go to like 150? Sure. If it goes to 150, oh my gosh, I'm gonna buy so many shares. It'll be ridiculous. It would be just ridiculous. But yeah, I think Fubo is potentially a 30 to 50x 10 years from now, as long as they continue to grow and do what they're doing. I see a depression for sure. Yeah, if energy remains high, I do too. especially the Fed, if they continue to raise like this and oil stays up, then yeah, you're definitely looking at some degree of depression. Didn't Brandon say all need to fear monkeypox? This bitch about to crash like a giant. Oh my gosh. Yeah, monkeypox. It's always something. It's always something now. It was COVID and cruise lines in early 2020, and then it was riots throughout 2020, the rest of 2020, and then it's fucking, Russia, Ukraine in 2022, 2021. Just there's been so much in the past 2 years. Like, it makes you wonder if people just didn't pay attention as much before, or if things are really like hitting the fan now. Does that make sense? Like, maybe a lot of this has been happening for a while, like 2017, 2018, 2019, but we just didn't pay attention. Or just everything's going to shit now. I have a small portion of my portfolio in Fubo. Yeah, me too. I do want to get it up to like 5% of my portfolio, but if that thing were to 30x, that would be 150% of your whole portfolio. So it would be a very substantial gain, even with 5%. And that's really with a long-term outlook. Fubo's got a great product, affordable compared to like cable, and there's a lot they have going for them. That's okay. They're pushing us into a civil war. Bring it on. Yeah. What was I watching? Oh, yeah. Have you guys ever seen the movie Apocalypto? I know you guys have seen the movie Apocalypto. Actually, the first quote on the screen went something along the lines of, it's never a like an up and coming country that conquers a larger country. It's the larger country conquering itself from within. I'm like, oh, that's deep. That is deep. They always want us to be scared. It's make you easy to manipulate. Next to the aliens are coming. Oh yeah, have you guys seen all the damn unclassified documents and videos? Some of that is wild. Please, I'm probably down 25% of my portfolio. I don't give a damn. Take all my money. I don't care. I'm not selling. Yeah, I'm down a lot too. Can't complain if you in the green. Man. Yeah, I mean, if you bought these stocks very early, like 2020, your portfolio might still be green. Or unless you had like Apple or Tesla, Microsoft. But this is unprecedented amount of damage that we've seen. Been on AMC for 14 months. Win moving. Thought it was Win Lambo. Really, it is undervalued. I just figure why not? It's better than buying blue chips. Talking about Fubo. Yeah. There's a much better risk to reward profile there, and I think worst case scenario, the thing would get bought out, because like, who wouldn't want to add Fubo's business model to their existing business? If you're something like Netflix, Apple, or even Microsoft, or just really anyone, like, it fits people's overall, a lot of companies' business models, and it's very cheap, for the revenue that they're bringing in. Very cheap. You don't find a price to sales ratio of a half of one all too often. Not even in really bad markets like this. Does not happen too often. I just got an alert from NASA that an asteroid is going to come close to Earth this week. Man, that's not good. We already have an asteroid that's going to come like super close to Earth in 2029. But it's good. I'm down way over 25%. LOL. Started investing in June last year. The knowledge I gained in this community is worth more than money lost, though. That's the thing, too. I mean, like, you're going to take losses. Hopefully, it's not like your whole life savings, like hundreds of thousands of dollars. But what it says in The Strangest Secret with Earl Nightingale, if you guys have not seen that, watch it after this. The Strangest Secret by Earl Nightingale, and you guys will see it come up on YouTube as one of the top things. It sounds old fashioned, but I listen to that like at least once a month still. And what they say in that, besides like everything else, it says that even a good man can be wiped out multiple times and make a fortune over again. It's how bad do you want it? What's your dedication like? So on and so forth. And once you have the knowledge, that's the biggest, thing that people lack, right? Like it's not like people are generally stupid in the world, right? Or they don't want to make money. A lot of people, for whatever reason or not, they can't let money sit and work for them, or they just don't have the knowledge, which I like to give people the benefit of the doubt. They probably just don't have the knowledge. And if you have the knowledge, oh man, you're already doing better than most. Where is good news? We have not had any good news. That's partly why the markets can't bounce. Strangest secret in the world, Earl Nightingale, but I believe you can just type in The Strangest Secret, Earl Nightingale. Nightingale. It'll come up. Just do. Oh. Yeah, The Strangest Secret by Earl Nightingale. It sounds old-fashioned, but you listen to this, and then just come back to it like every month. This has single-handedly changed my life in the last couple of years. And it's changed many people's lives. Will market continue to crash this week? I think there's a lot that is priced in. I think the biggest things that are going to rock the markets at this point is things that we don't see coming, possible bankruptcies, stuff like that, or Snapchat news, right? Snapchat single-handedly, because it's essentially showcasing all of its advertisers by saying, hey, we're not going to hit our targets. We're not even going to come close. Situation's getting much worse. That is forecasting to like thousands of other companies and telling the markets that they are not doing good as well. So, when things like that come out, it's very hard and impossible to really forecast when that will happen. And that's probably the biggest risk at this point. Whatever happens with China and COVID, or Russia and Ukraine, if they, did do something crazy, that could obviously come into play. But the markets are pricing in a lot of pain. They're already pricing in a recession. They're already pricing in the Fed to raise rates super aggressively. So we do have the Fed minutes tomorrow. And that's basically a transcript of what was said at the last Fed meeting, where they kind of talk about setting policy for the next Fed meeting, and kind of where they see where their outlook is for the economy. Stuff like that, like very important things for the markets, will be said in that report. And then that'll be good. Hopefully. But it's very hard. Sierra the Noob. Fist bump. I like it. I like it. Thank you. Thank you guys that have donated with the super chats. Very generous. I'm down 65%. Start buy at 56 and still buying more. But the truth is that's painfully. Yeah, it is. I mean, it's not always a pleasant thing. But if you have confidence in, what it's gonna look like in a year or two, just broadly speaking about the markets, I know that was specifically about AMC, but whether it's AMC or the broad markets, if you just know what you're buying and you know why you're buying it and you have a thesis and you've done the work and all that, then it shouldn't be as as much of a negative mental strain on you. Does that make sense? Google was down like 7% at one point today. The market is fucked. Yeah, because Snapchat basically was saying that advertisers are in a very bad position. And who's advertisers? Everyone. Like most companies advertise some way, shape, or form. It's even a damn tax write-off. Like if people are not advertising at all, or they're slowing down and cutting back substantially in the course of a month, that's very bad. And that's going to be bad for Google too, but I don't know how much it'll actually affect things. Hold on one second, guys. I thought somebody pulled in. Never mind. Hey, thanks for all the wisdom you give us. Well, thank you guys. Thank you guys for listening and tuning in, and hopefully you do learn something. That's the goal here. But this market is very, very wild. I can't say I've seen a market this just back and forth. There's overall like a lack of price stability. There's a lack of confidence. There's a lack of certainty, right? Like nobody knows what's going to happen. Very, very rarely do you have people that are widespread in their opinions. Some people think we're not going to see a recession until, the end of 2023. Some people think we're already in a recession. Some people think earnings will be great. Like if you look at analyst targets for earnings, they haven't revised them down yet for 2022. So there's still a super high bar. And like the analysts over here think things are great. And then Snapchat comes out and says, yeah, things are not good. There's a big disconnect here. And who is right, who is wrong? Unfortunately, well, depending how you look at it, if you just want stocks to go back up tomorrow, then unfortunately we're kind of leaning towards the negative side of all of this, like a recession coming sooner than not, earnings not looking so good. But that means there's a lot of room to potentially get away from that place that we are now, to kind of start to see the markets pricing in something better for the future. Like you're in a pretty bad place right now, but be fearful when others are greedy and greedy when others are fearful. That's key. About to go long on UVXY calls. Yeah, UVXY is interesting. Congrats on the new coming edition, TCI. Best of luck. Thank you, brother. Very exciting. Very exciting. What was I saying? Yeah, UVXY. It's weird because when we were hitting the lows at 380 on the SPY and bouncing around there, the UVXY was actually not hitting a new all-time high as the markets were going down. So you didn't see as many people rushing into puts. They didn't rush into a lot of insurance, which makes me at least think that potentially there's not a need for as much insurance, because potentially there's not as many people actually owning stocks right now. A lot of people might be in cash, and that might be partly how they are hedging out their portfolios. Because if you're, call it 30% cash, 70% equity, sure, you might want to get some protection, but that 30% cash is basically like having, for lack of a better analogy here, but like having like a short position, right? You're not losing money, you're actually gaining money by having cash, because portfolio values are going down, stocks are going down. That cash becomes more valuable as markets go down, because what, you can buy more shares with that same amount of cash. So there's a lot going on right now, though. You have some unrealized loss, fellas. If you weren't going to sell at 100, then it don't matter if the price is 10. Enjoy the discounts while you got them. Yeah, and I mean, I feel like that's a hard thing for a lot of people to do. Is, there's always that 2020 vision where, a lot of people do get fearful during these times and they don't want to buy as much. And then when the markets do rally, they're like, I should have bought more, And I guess that certain degree of confidence comes with seeing a lot of market crashes. Like I'm nowhere near like somebody that's been in the markets for like 20 years, but I've lived through the 2018 crash, both of those, early 2018, end of 2018 crashes. You could call it two crashes, but we'll just call it one. And then the 2020 crash, now this crash. I mean, you definitely start to look at things like, hey, I'm going to buy it now because the situation is already bad. If it continues to go down, I'll be in a much better place a couple years from now. And every time that I have bought the dip during the 2018 crash, 2020 crash did well. And I think the 2022 crash will be the same story. But it might take a little bit longer because the Fed is not our friend. And the Fed does not like the markets right now. But, yeah, I would really watch energy markets. Seriously, though, for any gauge of how the economy is going to do, that is going to be the utmost importance. Whatever happens with energy here is going to really make the odds of recession a lot more real, or make it a little bit more tame. But doesn't look like there's anything that's gonna help us too much. But we'll see. What else do we have for economic data for the rest of this week? Let's see. Tomorrow is obviously Wednesday. Yeah, you guys see the new home sales? That data that came out today? Oh my gosh, that was terrible. Oh, it was so bad. Down 16% year over year. Terrible. But you do have some ECB speakers, which can move our markets a little bit. You have some MBA mortgage data, durable good orders month over month. So that comes out at 7:30 in the morning. That could be pretty important for the overall state of the consumer and the economy. But Fed Brainerd, that speaks at 12:15 tomorrow, just after noon. And then the FOMC report at 2 p.m. And that's going to be the main catalyst for tomorrow, with those other two smaller catalysts. And then for Thursday, you have GDP growth rate quarter over quarter for second quarter. That's definitely going to give us a real indication of how close this recession is. Any GDP data will be big for the markets. But last time GDP came out and it was really, really bad, like negative 1.2%, you actually seen the markets have like a 2.5% positive day on the S&P 500. So I wouldn't rule out bad economic data potentially being good for the markets, but still. Initial jobless claims as well, corporate profits, GDP price index, continuing jobless claims, core PCE prices, PCE prices quarter over quarter, GDP sales quarter over quarter, pending home sales year over year, pending home sales month over month, Kansas Fed manufacturing index for May, and then you do have some treasury auctions as well. So Thursday is going to be a big day as well. And if that's good, if tomorrow's good, if Thursday's good, then that could set us up for a pretty bullish rally here. But I mean, overall, you're well overdue for a rally, or for at least a bounce. Like for the S&P to go back up to like 415 is definitely reasonable here in the short-term future. Then we did struggle to hit 410 not long ago. actual evidence of a human doing that sick shit. Don't even talk about it. I feel you, bro. I was in the 70s crash. Yeah. Oh my gosh. That was bad, huh? .com crash for me. Yeah, that was a little bit, well, that was like very different because, a lot of the stocks in the .com bubble, like, it was so new, most of them didn't even have like revenue at all. So like there was no valuation support. It's a different story now, because there is revenue at, tech companies. It's not the same. But it's looking like the same thing. I mean, if you look at the QQQ, it's looking like we're on the same trajectory to going down 70%. But I would think we're closer to a bottom now than not, just mathematically speaking. But the markets will probably trade sideways for quite a while. But yeah, the QQQ is ugly. So ugly. I miss my Bud Light. Tyler, where is it at? Besides the point, I have 4 tickets for Maverick tomorrow. I do have a Bud Light. I do. I haven't took a drink during this live stream, though. I've only took like 2 drinks out of it, honestly. My SQQs are up 200%. Okay. There we go. Yeah, today was pretty tough. I mean, down 2%. I have QQQ calls that I bought 2 of them for about $200, about $100 a piece, and then they went up to like $225 a piece. So I sold one, made the other one free, and I'm riding that out, and I think I'm still up like 40% on it. And I'm pretty confident we're gonna see at least some kind of bounce here, as long as we don't get hit with any new scary information. Inside the market, what's happening around your world, it's going to project what's coming. Yeah, I mean, most certainly. And like Wall Street might not realize it, they just have a lot of money. They don't look at things quite the same way. So they can be very late to trends. Like there's a reason why people on YouTube, myself included, but other people were calling for this 6 months ago. Like simple, Econ 101, like the biggest spenders in the economy, the most consistent spenders are, lower to mid income individuals, because they spend a lot of money. Like a lot of people that are building wealth in that building wealth phase don't tend to spend as much money. And rich people do and they don't, right? Like they do, then they don't. That's an argument for another video. But Wall Street don't catch on to these trends where people are starting to slow down and oil is really starting to hurt people's families, right? It's making them be able to do less things, to buy less products or services, stuff like that. Wall Street don't catch on to. So we've seen this coming for a while, and Wall Street finally figured it out, and would really could be seen as a big overreaction. But price of oil, that's very, very key right now, because that takes a massive hit out of people's pockets, and potentially what they're going to spend, for other services. And then Bill Ackman says, a more aggressive Fed or market collapse are the only ways to stop this inflation. Buyers for stocks. How does this downward market spiral end? It ends when the Fed puts a line in the sand on inflation and says it will do whatever it takes, and then demonstrates it is serious by immediately raising rates to neutral and committing to continue. See, Bill Ackman's one of those shady figures where he says, hey, this will be good for the markets to bottom, but at the same time, he knows the markets would just instantly tank off of the Fed raising rates instantly to zero. Like, Bill Ackman has a short position on the markets when he's coming out and saying that. This guy went out in 2020 on CNBC and said hotels are going to zero. The stock market is going to zero. Once in 100-year pandemic, there's nothing nobody can do. The government can't save these businesses. He literally said that and had like a $2 billion short position on the markets. I think he made like $30 billion or something like that. Crazy amount of money. But yeah, that's going to be it for today. Looks like we're bouncing back. I got some things I need to do. S&P futures up 0.41%, NASDAQ up 0.64%, oil up 1.19%, Dow Jones futures up 0.26%. So, yeah, Bill Ackman did get wrecked on Netflix. That is correct. Just absolutely destroyed. But yeah, that's that. You guys know kind of what to expect for tomorrow. Fed report coming out at about 2 p.m. I don't really expect a huge move either way until that does come out. And then likely see a pretty positive rally off of that unless we get something that is new that does spark the market. So you guys enjoy the rest of your night. If you guys want to get your free stocks, Webull, Moomoo, and Public down below in the description. It's probably the best time ever to get free stocks and free money, considering what kind of return you might get and what kind of free stocks you might get. I've definitely got a good handful of some pretty good companies over, the last months from letting people use the links. So